Hey, how's everyone doing? This is Anthony Murray. I am excited to be with you today. Listen, I just wanted to let you know how fortunate we are to have you with us today. And you know what? This is going to be a really awesome show. There's a few things that I want to share with you that I believe is going to be extremely important. Our show today is the process, the life insurance process. All right. And I want to make sure that you guys are aware of what it takes. All right. It's not an easy situation. You know, people asking you questions, getting all in your business. It's not easy, is it? But it's very necessary. Very necessary. So, with that said, I just want to let you know that this is going to be a phenomenal show today. All right. So let's get ready to get into it. And I want to read you, a letter. All right. As soon as I find this letter, I want to read it to you. I believe, excuse me, it'll help you to understand a little bit something else about the life insurance process. It is a process, and it's a process that um, a lot of people just don't understand. They take it for granted, and we shouldn't. We really shouldn't. All right. It seems like people are getting all into your business. And in one sense of the word, you know what? They are. But in another sense of the word, they are not. Why? Because um, there's certain information that must be asked, or certain questions that must be asked, and certain information that we must attain. And the reason we attain this information is because the federal government will look at, if an event occurs, he said this, she said that, somebody said we didn't ask a certain question or whatever. And if it's not documented, then that financial representative, guess what? They don't have a leg to stand on. Not one. Not one leg to stand on. All right. So it becomes a he said, she said type thing. And that's not pretty, right? That wouldn't be pretty at all. So this is going to be a very critical show. I hope you guys would benefit from it, and that you would gain something from it, because this is going to be the show that help transform your thinking, and it's going to help you to understand that you really need to allow certain questions to be asked. All right. You need certain questions to be asked, because if they're not, then there could be trouble later on. Now, I want to read this letter to you. It's called The Voice of Your Insurance. The Voice of Your Insurance. It says, hold on, let me see, let me read it to you. It says, hello, I am your life insurance policy. You and I have similar purposes in this world. It is your job to provide food, clothing, shelter, schooling, medicine, and other things for your loved ones. You do this while I lie in your safe deposit box or wherever you keep your life insurance. Hey, don't be like most folks and don't even know where your life insurance policy is. That's horrible. Horrible. You don't know where your life insurance policy is, something's wrong with that picture, right? So trust me when I tell you, a lot of people don't. A lot of people don't. All right. Out of your earnings will come the cost of my upkeep. At times, I may appear insignificant to you, but someday, and who knows when, you and I will change places. So when you have a life insurance policy, the purpose of that policy is to exchange places, but what we say in the industry is to shift the burden of responsibility or risk. The insurance company is really the one taking the risk. Yeah, I hear what some of you are saying. Hey, you know what? I'm taking a risk too. I'm taking risk. I'm taking risk by paying that premium. Yes, you are. You are taking risk by paying that premium. But also, the insurance company is taking the main risk. Let's look at it like this. Let's say you get a term policy and you pay $30, $50 a month. You're 20 years old and you're going to pay till age, I don't know. Now, let's not use a term because term terminates after 20 years. Let's say whole life. And you pay $100 till you're 100 years old. All right. So and you're 25 now. So that's 75 times 75. All right. Let's do it this way. 100 times 12 times. So you're going to pay $90,000. But the insurance policy you got is worth $500,000 or $200,000. Now, ask yourself the question, who is really taking the risk? 200 versus 90. 200,000 versus 90. Now, I have programs that after age 65, you really don't have to pay anything. Or age 70, you don't have to be. It depends on how it's set up. Okay? So that's one thing. Now, I want to finish reading this letter. And it says, when you are laid to rest, I will come alive and do your job. I may provide food, clothing, shelter, schooling, medicine, and other things your family will continue to need, just as you are doing now. When your work and labor are done, mine will begin. Through me, your hands can carry on. Whenever you feel the price you're paying for my upkeep is burdensome, remember that I can do more for you and your family than you will ever do for me. Now, keep in mind, this is an insurance policy talking to you. If you do your part, I will do my part. Sincerely, your life insurance policy. Now, that's powerful, isn't it? Isn't that powerful? Yeah, it is. That's powerful. So this is a situation where you have some responsibility, but you don't have the burden. You don't have the burden, the risk, like the insurance company. Even if you had a term policy and it lasts for 20 years, all right? And let's say that you transition in life within that period of time. And let's use most term policies, they usually don't cost that much. Let's say it's for $500,000. You're paying $75 a month. That's $900 a year times 20. That's only $18,000 for $500,000. Who's taking the risk? All right, so I want you to see that part. Now, give me 1 minute. I'm going to pull out a form. And in this form, I'm going to ask you a few questions. All right. And I know you guys aren't going to you're not really going to answer the questions, all right? Because you're there and I'm here, okay? But I want you to understand what's involved. That's what I want. I want you to understand. So one of the first things that we would need to know is your name. Right? That's one of the first things. We would need to know your name. And when I've dealt with people that they're like, well, what you need that information for? I want you to think about this for a moment. Why would you think we would need your name, your address, your date of birth? I was talking to a gentleman one day, and he wanted an insurance policy. He has some health issues. So I said, okay, well, I need to ask you several questions. And let's go from there. So I asked him his name. He gave me his name. I asked him his age. He gave me his age. I asked him his address. He started asking me questions. Why do you need that information? Now, he came to me for insurance. Well, your address actually goes on the policy. Your age, your date of birth actually goes in the policy, but that's just the beginning of it. Okay? So excuse me, I'm up here trying to do two things at one time. All right. Now, this is very interesting. It's very interesting. He started getting kind of shaky when I started asking him personal questions. Life insurance is very, very, hear me, very personal. Very personal. You're shifting the risk of financial responsibility. So this is critical for you to understand that when you apply for a life insurance policy, first of all, there's no guarantee you're going to get it because we don't know if health-wise you're going to qualify. We just don't know. All right. So some companies, depending on the age, have eliminated health questions. And now you could get that insurance policy usually is limited up to 25, maybe 30 or $50,000, with 50 being the max that I've run into. Others have maybe a few health questions, but not that many. And here again, you're limited as to how much coverage. So what is it we need? When you're applying for it, we have to qualify, make sure that the plan is suitable or you are financially able to pay for the plan. All right. So we get your name, your address. I even ask for the email because a lot of people want information, and I send it to them via email. All right. Via email. So with that said, I ask concerns. What concerns do you have? Some people want to, their concerns that they have is lack of money for retirement. But will their kids be able to go to college if they were to pass too soon? Health care. All right. So there's a variety. What concerns do you have? I want to know what concerns you have now, what concerns you have later. Okay. So that's extremely, extremely important and valuable. What concerns a person have. And then we need to talk about income. Oh, by the way, that guy never did get his coverage. Now, you know what was really interesting is that he what was really interesting is that he had cancer. He had cancer. Okay. Now, when somebody has cancer, there's not too many places they could go and get coverage. All right, I'm trying to fix something here. There we go. There's not too many places they could go to get coverage. And usually when you get that coverage, you have to wait a couple of years before the full amount of the death benefit is acknowledged. It's usually RO return of premium type situation, meaning for the first 2 years, if a person should transition in life, whatever premium was paid, plus in some cases a small percentage, that's the amount that would be paid to the beneficiary. Now, that particular policy, there's no questions about health, except for do you smoke? Other than that, they don't ask, do you have cancer? Are you this? Are you that? Anything like that. They don't ask that. All right. So moving right along, during the process of the life insurance process, that professional person that you're working with, they need to know your assets. Why would they need to know your assets? Well, if you're trying to get life insurance to cover your family, then there's a reason why they need to know that. Now, if you own a house, the house is valued at 200,000, 300,000. You own several cars. You add all those up together, and they come up to be maybe 100,000. All right, so now we're developing what your total estate value is, right? Then you have your income. You got to think about that income, okay? Because now when you transition in life, that income is gone. So a lot of people have life insurance through their employer. Thumbs up, double thumbs up. That's awesome. You need life insurance through your employer. That's good if you could get that. Why? Because it's a group coverage. There's no health question. No, not many. In most cases, there's no health questions asked. They just want to get that check. They throw you in a pool, okay, and you're in a group, and you're going to pay a very small percentage that comes out of your check. But you still need coverage outside of that. And the reason you need coverage outside of that is so that when you change jobs or when you retire, you already have coverage. The older you are, when you apply for life insurance, the more it's going to cost you. The older you are. So now you're in your 30s, you're in your 40s, you got a job, you're in your 20s, and hey, I got life insurance, I got it on my job. All right, cool. That's good. You got it on your job. Now, what about when you transition? You change jobs. Then what? Then what? Usually there's a waiting period, right? Before you get coverage again. Now, when you do get coverage again, it starts all over, right? It starts all over. So it's for that face amount, whatever that face amount is. But let's say you're getting ready to retire. You have insurance on your job. You're getting ready to retire. You have life insurance. Let's say you have $100,000 of life insurance or $50,000. You're usually going to give you double the amount your annual salary is. Okay. So you get that amount, and now you are ready to retire. So let's say it's $100,000 policy. That $100,000 policy is a term policy, so you're only paying pennies for it. But now, and you got that when you were in your 30s on that job. Now you're 65. So you're not going to get that coverage at age 65 for the same amount you started paying when you were 30 on your job. You're going to pay whatever the rate is at your current age, and it's not going to be a term policy. It's going to be a whole life policy. So the cost is going to be extremely more. It's going to be astronomical in some cases, where you may have been paying $11, $15 a pay period, maybe $40 a month. It's going to shoot up to $300 to $400 a month. You want to get that type of coverage while you're young. Very important. You want to get that while you are young. And when you do that, when you're young, then you can have a lower premium. A lower premium. So if you have that lower premium, if you have that lower premium, when you're young, you'll have it when you're retired, when you're 65, or if you retire at 70 or anywhere in between or afterwards, right? So they're developing, we have to develop your estate. So we look at the value of your home. You say, I don't own a house, I rent. All right, well, how much do you pay in rent? We want to make sure that you're covered. This is what we call the 10-20 rule. You want at least 20 times the amount of your income. In a life insurance policy. And the reason for that is because if your annual income, let's say, is $40,000 a year, and now you transition prematurely, you're married, that's $40,000 minus taxes and what have you, that your family will have to compensate for. So now the risk is shifted when you have a life insurance policy. So why do we say 20 years? Because the average person, let's say your spouse isn't able to work. The average person is going to live at least 20 years after they retire. So now when your spouse needs that money, all right, it's available. So 20 times 40 is $800,000. Most people aren't going to do that. All right, but you better get something. So there's questions we ask. Do you have a checking account? Do you have a savings account? Why? Because we do not want to use your last penny. If you don't have a checking account, at least a checking account. Why should I give you an insurance policy? You're not saving money. How do I know you're going to be able to afford this? I don't want to offer you something that you can't afford. All right, this is important. This is extremely important. I don't want to offer you something that you cannot afford. All right, if you can't afford it, then what? Then what? Then what? It's gone. You see, you're going to cancel that policy. So we have to ask the questions. All right. So we ask you, do you have car loans? Do you have credit cards? Do you have personal loans out? What is your debt? We need to know. All right. Now, the financial professional, if you're in debt, will give you suggestions. When I have clients that they're in debt, we talk about their debt and we see if we can find a way that we could eliminate their debt. All right. So the first thing you need when you're ready to be responsible person, the first thing is the foundation. All right. You need to lay a foundation, right? When someone builds a house, first thing they do is lay a foundation. That's important. You need to lay a foundation. All right. What's that foundation? That's critical. What is that foundation? You need protection, proper protection. If you have proper protection and something happens, if you have proper protection and something happens, then your family or your loved ones are taken care of. So what's included in proper protection? Life insurance, a will or a trust, maybe a disability policy, depending on the type of work you're doing. All of that is included. Extremely important for you to understand that. All of that is included. You want to look at that. Not included in the policy, included in proper protection. So we ask these questions. What type of work do you do? If you're doing a very physical job, you definitely need disability coverage. Now, not that something's going to happen to you on your job. If something happens to you on your job, you'll be covered by their disability. But if you have a very physical job, chances are you're going to feel it later on in life, and it may affect you. What's the other thing that you need for proper protection? What about long-term care coverage? Long-term care. All right. So long-term care is important because it covers something that most families are not prepared for. When would you need long-term care? All right. Long-term care refers to the assistance that people with serious illness, injury, or cognitive impairment require with activities of daily living. All right. So this skilled care is provided by nurses, therapists, or other healthcare professionals. All right, it's critical. When do you need long-term care? You need long-term care when you're not able to perform at least 2 of your daily functions. Not you need help. You need assistance feeding yourself. You need assistance getting in and out of the bed or transferring. You need assistance getting dressed. You need assistance getting into a chair. You need assistance from someone to help you get to the bathroom. You need assistance. All right. You need assistance. Okay. So this is what long-term care is for. And a lot of people just don't have it. You ever known of anyone who had to take care of a loved one? They had to help take care of their mother, their brother, their sister, their father, their grandfather, their grandmother. It takes their life away. So now it's not just that person who needs the assistance, whose life has been held back, but the person assisting them, unless that person is a paid professional, and that's what they're paid to do. All right. So there's different types of insurance policies, and so there's a variety of questions that we have to ask people to help determine what's suitable. Don't forget that word, suitable. What is suitable for that person? Not only financially, but suitable for them as far as coverage. So we ask these different questions, and the purpose is to help them identify and help them realize the seriousness and help them realize what they need. All right, the life insurance process, and why we have a process is very important. It's very important. Okay, you need to know that there is a process involved. There's going to be some questions, and it's going to seem like people are just getting into your business. Well, they are. We are. But for your benefit, not for our benefit. See, most people think that insurance agents or financial professionals only want your money. No. No. If we do not make sure that this insurance policy, whatever one you get, is suitable for you, and you file a complaint with the Attorney General or the insurance commissioner, that insurance professional could get in big, big trouble. Make no doubt. I mean, there's no doubt about it. This is a very, very serious thing. Very serious. You need to understand what's happening and why it's happening. All right. So we cover a variety of things, especially when it comes to monthly expenses, rent or mortgage. Mortgage insurance. We need to ask about that. What about property taxes? These are some of the questions. A homeowner association, utilities. We're gonna ask a variety of questions. We'll even ask, how much do you pay for your internet? What about your mobile phone? What, you have a pet? We need to know about those expenses. Why? We need to know what money is going out. When someone is designing an insurance policy, they're designing to make sure that in your premature transition in life, that the family is taken care of. And you know, your family also includes Rover or your feline, your cat, your dog, whatever, your horse. All right, it includes, that's all your expenses, your car expense, your car insurance, your car maintenance, how much you pay monthly. We're trying to get these monthly expenses. Do you ride share? All right, do you have prescriptions, subscriptions for different things, for maybe the gym or something like, is it a family plan? All right, child care, clothing, health insurance. Are you paying for that for the family? All right, so we're looking at a variety of things. A variety of things. Very, very important. Very important. This information could help ease the burden on your family. Because right when you are ready, or you feel, hey, look, things are going good in life, I'm having a great life, and then all of a sudden, you pass. Well, we're going to make sure that at least for 20 years, the family is taken care of. All right, so that's very important, very, very critical. All right, very critical. Okay, now look, I want to give you a little information. I want to give you just a little bit of information, what you could pass on to your friends. You could pass this on to anybody. All right. We always love to have your folks with us. Okay. Now, you probably want to know, how can you reach me? How can you? It's very simple to reach me. Very simple to reach me. All right. Here's my information right there going across the bottom of the screen, excuse me. All right. I have a direct line if you want to call me direct. My email and my phone number is right there. If you have questions, all right, you pull this up later on, whether you're on Facebook or YouTube or wherever you are, you pull this up and you want to know what type of programs, what type of products are out there, let me know. Listen, I have over somewhere in the neighborhood of 200 companies. I don't need to deal with all them folks. So I just deal with a handful. I deal with a handful. And for the most, I have something that'll help everybody for the most part. For the most part. Now, at WSB, World Financial Group, World System Builder, that's what WSB is abbreviated for. We provide financial literacy courses, and their classes, not courses, excuse me, Monday through Friday, 3 times a day, except for Wednesday. It's only twice. Very, very informative, very healthy. You will really enjoy these workshops. They're around an hour, maybe an hour and 50 minutes. They're online and they're free. They're online and they are free. So it's going across the bottom of the screen right there. Okay? That's how you could, attend those workshops. All right. If you are interested in getting into the financial industry, the life insurance industry, let me know. There's programs and products at a discount rate for WSB referrals, which means you come into the business, I've referred you, now you'll be able to get discount on the course. You need at least 40 hours of classroom training. You could do it live. There's a variety of ways. You could do it via video. All right. So there's a variety of ways you could attend and you could do these workshops. What else is there that I want to show you? And I hope you guys appreciated what we did today. I wanted to talk about this because if you don't have life insurance, you need it. So there's various types. There's a term policy. Life insurance is interesting. So the term policy is like renting an apartment. All right, when you rent an apartment, you don't own it. It's not yours. You're there for a specific or a specified period of time. Maybe you rent from that landlord for years, but it still is not yours. So that's a term policy. Then there's a whole life policy. The whole life policy is like owning a house. When you own a house, it's yours. You're responsible for it. You are responsible for it. So that's the main difference right there. Now, every life insurance policy, believe it or not, is a term policy. Every one. Every one of them is a term policy. Okay? All right? Every life insurance policy is a term policy. Some of them offer cash value, and then the other does not. So you have a whole life policy that offers cash value. You have an indexed policy that offers cash value. And it has a variety of options or add-ons available to you. All right. So if you want a policy that has long-term care, it's called what we call hybrid life insurance. That's an insurance policy that offers cash value and something else like long-term care or disability. All right. So you want to take the advantage of these things while you're young. Well, I don't need long-term care. Man, I'm only 25. You better get it. Get it while you're 25, while you're 30, 32. You wait till you're 60, 65, when you're all stiff and everything, and your health is going down. If that happens, that doesn't happen to everybody. I'm in my mid-60s, and my health is I'm strong as an ox. But for some, they're not as fortunate. They're not as fortunate. Okay? And in their 60s, I've run into some of my classmates, man, from high school, and I look at them, I'm like, whoa, oh my goodness, what happened to you? I've run into some people that I know, and I look at them, and they're 10 years, 5 years, 3 years younger than me. And they look 10 years, 5 years, 20 years older than me. They had a hard life. I've run into people, and we've talked about life insurance, and they put it on the back burner. And then they contact me when it's too late. Something happened in their health that disqualified them. You don't want to wait till then. You do not want to wait. All right, so the average life insurance process takes around an hour for the application, and then it can take up to, in some cases, a week, 2 weeks, a month, or a month and a half, or even 2 months before it's approved, depending on the information that's in the policy. The insurance company may ask for more information, for more details. That's not surprising. It's common. So don't get alarmed. Don't get frustrated. Don't stop the process. Keep it going. Don't procrastinate. Don't put it on the back burner. I had a family that did that several years ago. The husband eventually died. They called me to get his insurance policy while he was in the hospital. I found out later on that when they called, he was in the hospital. It was kind of late. Around 3 weeks later, he died. Don't wait for the last minute. If it's on your mind to get that policy, follow the process. Get it done. Make sure you're with somebody that knows what they're doing. Okay? That's very, very, very important. Well, listen, my time really is coming to a close. All right. We talked a little bit about legacy. And I need to ask you the question, will you leave a financial legacy or financial hardship for your family? What will it be? legacy or hardship. All right, so there's a process, right? When we're talking, we're developing how much coverage you need. We call it the DIME method. The DIME method. What is the DIME method? I'm going to share it with you in a minute. All right. The DIME method. What is it? D equals debt. We want to know about your debt. I equals income. We need to know about your income to make sure this is suitable or affordable for you. M is mortgage. Do you have a mortgage? Are you renting? E is for education. Do you have children that's going to need money for college, for technical school, or whatever? All right. Or are you going to need, your spouse going to need it? All right. So that's very important, people. Very important. Again, it's called the DIME method. All right. All right. So remember, I said that the trust or will is something that you need. So we have a company that we deal with. They are the largest estate planning law firm in the USA. The largest. With 150 or whatever amount of attorneys located in 9 countries around the world. You need a trust. Trust protects things immediately. That's part of that protection foundation. Then after the protection foundation, we want to help you with your debt. Then after debt, we want to make sure you have an emergency fund. After that, now you can invest what you have left over. All right. So there is a method to our madness and a reason for the process. A method to the madness and a reason for the process. Hey, that's my name and number right there. If you have questions and you want to get back to me, reach out. I love to hear from you. Okay, that's it right there. And I just want to say thank you. Thank you for spending time with me today. Thank you for taking time out of your schedule to be with me. And I hope that you had a good time. I had a good time. We all God's children had a good time. All right. And we will see you next time. God bless.